I used to compare with investing in oil and gas companies is like sitting on a train that is, heading towards a big wall that is going to crash, but eventually. But investors keep sitting there, and they point to that they tell the driver once a year that they should switch the track, and it doesn't. So, but they still point to that every year that we told them to switch the track, and it doesn't hold. They should get off that train. Yeah. And there's also financial risk to that, because as you come closer, it's going to be crowded at the exits. A lot of investors are going to want to jump, and there are probably going to be financial impacts from that. Stranded assets and direct financial impacts if you stay too long on those runaway oil trains.
Warmly welcome to We Don't Have Time Climate Dialogue Series. My name is Ingmar Rentzhog. I'm founder and CEO of We Don't Have Time. And with me, I have a very interesting guest, Jakob König from Fair Finance Guide. Warmly welcome here.
Thank you. Great to be here.
And the reason why we have invited you is that we are right now focusing on finance, because we need to funnel the money from the bad to the good. And last week, we had a very interesting conversation with one of the largest pension funds in Sweden, AP7, Johan Florén, their head of ESG. We're talking about why they're investing in fossil fuel and Saudi Aramco. And the reason why we had this conversation was partly because of you, Jakob. Because your organization, you have gone through all the investors in Sweden and see who are investing in oil and who is not investing in oil, right?
Yep.
And you also quite recently launched a report that are also discussed quite a lot on We Don't Have Time. And it's a report where you have actually gathered data about the big banks in Sweden. And you have found out, you can tell yourself, there's some quite difference between the largest bank in Sweden, how much they lend to oil, right? What was the biggest finding in this report?
Well, it's the first time that we actually mapped the real climate footprint of the banks. And what's really striking is that a big part of the bank's footprint is from the continued lending to oil and gas. So it's a small part of their lending, but it has an explosive impact on their climate footprint. So that was really striking. But also that the banks differ a lot. So you see big differences. Some banks are really carbon intensive, while others are much less.
And that is what I think is very interesting, because if they can do differently, everyone can do it in the end, right? And we will dig deeper into this. And I want to invite you and have a seat for the conversation.
Thank you.
Jakob, please tell the audience, Fair Finance Guide, what is it all about? What do you do?
We basically give the public, citizens, an insight into how their money is used in their banks, by their pension funds. Where is the money going? How responsibly, sustainably is it invested? How responsibly are banks and pension funds acting as investors, as owners? So give more insight to the public so that they can react to this and demand more sustainable use of their money.
My own background is, before I started We Don't Have Time, I was also working in the finance industry. And that's why this conversation is very interesting, because you have not always been on the side where you pressure the banks. You have also been working on the inside with the banks, right? Can you tell us a little bit about that? When we did some research, we found an article where you were labeled snob of the school. So you have made a kind of journey from the snob to this justice advocate in finance. How did you end up here?
Yeah, I mean, originally I dreamed of being an investment banker in London or somewhere, and I was totally into stock markets and even day trading, and and then I I realized that there was actually a field in the financial sector called ethical investments or sustainable investments, and that was really, I was so amazed that you actually, my two favorite kind of beliefs or interests, finance and sustainability or environmental issues are combined in one field. So I worked for several years in the financial sector with sustainability issues, engaging with big companies, screening their business practices against UN principles and other, norms and conventions, and working with banks, helping banks to engage and with companies that they invest in, which was really exciting. But after some years, I grew increasingly frustrated about that the pace was too slow. There was a lot of talking, but much less action. And I thought, what if people knew how their money actually is invested, where it's actually going, that it's linked to issues that they really care about. And if they get that insight and can react to it, it would be much stronger incentive for market participants, pension funds, banks, to improve in this field and not just do the kind of bare minimum.
And so now you're advocating strongly and educating consumers about what their banks are up to and pension funds, etc. Do you see that when you inform them about this issue that they are getting interested, or is it a hard time to get them to interest? I know what I did before I myself was communicating about investment, and sometimes it's a very big challenge to get someone interested in their pension savings at all, because it's going to be used 40 years from now, etc. How is the engagement around what you do? Is this also a way to get people interested in the money by this reason?
Yeah, we see a very broad, big interest among Swedish consumers in sustainability issues. So there is a demand for this kind of information. You have to make it, what's key is to make it simple, and to not put the burden in the laps of the bank clients or pension savers, but actually we're trying to serve them with easy information about how different banks and pension funds perform, and then an easy way to act on this by sending a pre-written complaint through our website, where there's a message going to the banks and saying, hey, I read this, I want you to improve, I'm a client, otherwise I will switch bank. And when banks get that feedback from their own clients, it creates a much stronger incentive for them to improve. It's really, and the banks are also welcoming this kind of client pressure, because it helps them to transition when clients are asking for more, green products, green solutions. So then they can develop the solutions. Otherwise, they would have to push, because people are not really aware of where that money actually has a very strong connection with, climate change and other sustainability issues. So when they become informed, it's an opportunity for the financial sector to transition. So
you say that the banks are thanking you, but that's really true. Don't they think that you are kind of someone that are disturbing their business also? What do they say to you?
Well, we have very constructive dialogues with the banks. It's they take it very constructively, and I think they basically see it as a harsh medicine. They see the purpose, the need for more informed public, because it helps them it creates a demand for something, more sustainable, and then they can develop solutions. Although it's really, I think it really, it hurts them when it's up in the big media that they're connected to, deforestation in the Amazon, or, hunting more oil in the Arctic, things like that, because people really react strongly about that. And it's like, what? My bank is doing this? I don't want to be part of that bank then. And I stop this. So it's a harsh medicine, but it leads to something good.
When I talk to banks and pension funds, they're often complaining about that the media are lifting a problem. It simplifies things, making it black and white instead of gray. How do you see that the way your methodology is to simplify things to get people to understand? Can it be too simplified instead of making things more complicated than it is? How do you see your role here?
We always, in our research process, we always involve the banks. So we have a lot of dialogue, and they get to fact check everything we do, and they get to report before we release it. And something that is really a big change since we launched Fair Finance Guide in Sweden, and it was also my personal mission to make it more nuanced, not to make it less black and white, is to include active ownership in the analysis. So it's not just being invested in a problem that is linked to a problem that is bad, it's how you act on that problem. And then you need to evaluate how does the engagement look like? Is it credible? So when we do reports, we always when we link banks to very severe sustainability issues, we ask them, the next question is, how do you act? And then we evaluate that process, the engagement process. And if that holds, it can be even better than to have no ties to the problem. So it is a possibility to influence severe issues around the world through investments. But it depends. It requires that you have a really engaged, robust process to try to influence that problem. So we evaluate that in the reports, and we say the banks are linked to these problems. This is how much money is going there, but we can see that this bank is actually doing the right thing. They have a very serious engagement process with time-bound targets and other criteria that we use. But the thing is that the pattern is that since we started, the normal kind of outcome in the engagement analysis is that most fail. That the process is way too weak to be, to deliver any results. So it's more like, it's a process that you have to be able to point to having a process that, yeah, we're invested here, but that's because we want to influence. And normally, historically, few have gone in through those processes in detail. And I personally worked with those processes. That's why we evaluate that dimension too. But to be honest, it often is too weak. So that's where banks really, they have to improve.
Yeah, I see. So it's not just the headline of your report. It's very, very much a lot of nuance in the report.
But of course, the perception of bank clients and consumers is more black and white. They see, hey, my money is going there. But we're happy to explain to actually this bank is, the bank is, invested here, but actually they're doing something good. We're totally happy to explain that to the public. So it is aligned with the UN Guiding Principles for Business and Human Rights. First you try to engage, then you divest.
And here is the interesting topic we are exploring here at We Don't Have Time. I totally agree that there are a lot of things you can do as an active owner. But regarding fossil fuel expansion and oil, we now have a COP agreement where the outcome is that we are going to transition away from fossil fuel. Do you really see that it's possible for owners to actually pressure oil companies to don't extract oil? Isn't that is it even possible? What is your opinion about this?
I personally don't believe it's possible. No, because it is the core business model. And historically, there has not been any example of a whole sector where you have been able to change the core business model.
Yeah.
So, the outlook for making these companies transition to become green or stop extracting all the oil assets that they have, it's not going to happen.
Do you see that there is a shift among investors after the COP outcome, now it's very clear that we must transition away, and every country has agreed on it. Do you see that some change here, or what is your view?
I mean, we definitely see improvements in the last few years. I mean, we have done several reports where we map how much Swedish banks are investing and financing fossil fuel companies. And in the last 2 years, the Swedish biggest banks have, on average, half their financing of fossil fuel companies. The problem is that still more than 100 billion Swedish crowns have been lent, or I would say 50 on a yearly basis. Over 50 billion Swedish crowns are being lent to companies that are, where the biggest part are still expanding their extraction. So they're funding an activity that will undermine our ability to reach the climate targets. But we do see a lot of improvements. We see, for example, on the investment side, in asset management investment funds, we see that three of four biggest banks in Sweden have divested completely from fossil fuel companies. The problem is that two of these continue to finance the same companies. So one part of the bank is boycotting companies for sustainability reasons, while the other part of the bank are actively helping them, funding them, giving them money. That's money, that the loans are the company's blood, makes them work. So it's not, they're not.
It's very schizophrenic.
It is.
And it's many, that's the whole thing with the green transition. That's where you see in many areas. I had the opportunity to interview Johan Florén, the ESG director of 87, about that they are invested in Saudi Aramco, something you have criticized heavily. And he had some interesting argument I would like to hear your views on. His reasoning is that it doesn't matter if 87 are selling their shares because they're only trading in secondaries, shares that already exist. When 87 sell shares in an oil company, someone else will buy it. And if that is an owner without ESG work or anything, it could actually worsen the situation. And he had some interesting studies, scientific studies that backing this up. How is your view? Do we have some? Is it something that is a valid point in it, or how do you see it?
I mean, if companies wouldn't care what investors said, they wouldn't bother too much about when investors are complaining about their business. They would just say, okay, leave, sell to someone else, and we have another owner that wouldn't care. That's not how the companies work. So it has an impact when big institutions take a clear stance, move their money, and publicly divest from a company that refuses to listen to the investor sustainability demands. Because it's the theory of change here is that it puts pressure, it causes a stigma around that company, which puts pressure on the company and the remaining investors. That that's a usual journalist gig. They look at investors exclusion list and say, okay, this big pension fund has excluded this company, and then they ask another one that is still invested and say, why are you still invested? They excluded the company. Why? How are you acting responsibly? And that puts more pressure on them to either reach results with that company or to actually also move their money. And the more big established institutions move their money away from companies that refuse to transition, it opens up for political regulation, because it's much easier for politicians and regulators to regulate something when not big financial institutions have financial interest in that activity. And they could even applaud such climate action, political action, because they put their money in the alternatives. So this is like the theory of change. And in the financial sector, there's a lot of, institutions look at each other. So if someone takes a step, I mean, we have so many examples in Sweden where one takes a step, adopts a position. We have, for example, Handelsbanken was the first one to adopt a policy against funding fossil expansion. Then half a year later, Danske Bank came up, also announced the same. Now we have 3 banks that haven't done it, and the pressure is really on them. So it's step by step, and this is how you change how the financial sector works.
And I think this is something I talked about with Johan, that is, I don't see that they have thinking in that direction. And that is, you can influence the companies you're invested in, but by doing the right thing and investing in the solutions instead, you can have a great influence on your peers, other pension funds. And that will create a lot larger effect. So my view is that in finance, you're lagging. Many companies in finance are lagging behind a little bit. They only see themselves isolated from how other investors are looking at them. Yeah. If you look into, the car industry, they are very heavily working with advocating, so other car manufacturers are also going electric, etc. Because we can't solve the climate crisis by just focusing on our own action. We need to do the action ourselves and influence others. And lead by example is a very good way of doing that. So I think your way to frame this is very to the point, I would say.
And just to, there are two ways for an investor to influence companies. It's firstly through engagement, by dialogue, voting, if there's an outlook to make a change. But the second step is divestment. So if, company's not listening, okay, we will have to divest publicly. So there are two ways to influence. It's not, either we invest and influence or we divest and not influence. Divesting is influencing when engagement doesn't work. And this is an escalation strategy that many pension funds and investors apply. It's just that they're not consistent. So they point to engagement in cases where there's no outlook for reaching a change. For example, in Saudi Aramco, it's an obvious case where you cannot reach, succeed. So you can't point to engagement and say, yeah, that's why we stay, because we're engaging. But you need to have a credible outlook to actually reach, results.
So, by selling a share, it's not so much that you're lowering the share value. It's more the communication and the signal value by doing it that is creating the change. That's your view, right?
Yeah, and I think because the systematic problem with the financial sector is that everyone invests a little everywhere. So everyone is part of the problem, but since everyone has a little part, they don't feel responsible for that part, for that activity. So it means everyone invests everywhere, but no one takes responsibility, which means that our big companies, multinationals, are owned by a huge number of small investors. They're big institutions, but they all have a small share. But it means that they don't have actively engaged owners that actually help them to transition, direct them in the right direction. Actually, on the opposite, the investor tend to focus on the short-term financial results. So they kind of then by that hold back the company's transition, because you have to invest in transition. And you need the investors, your owners' support in transitioning. But if you have then, 1,000 small shareholders that are not actively involved in that company, then it's much more difficult.
And this is very much because the big asset managers are investing in index funds, so they get everything and it's very low fee, etc. So I would like to hear your view. Is index fund a big part of the problem, that index funds are so big? Or what is your view on the index fund investment?
Yeah, it's a big part. It's a big part of the problem. Index fund strategies, passive strategies, where you just blindly invest in thousands of companies, and you're not engaged in the companies. You don't keep track of the sustainability risks, and you especially are not engaged in dealing with these risks. Then companies need active owners that know what they do and give their approval to investing in transitioning to more sustainable business models. If they just have thousands of passive investors that just sit like, I used to compare with investing in oil and gas companies is like sitting on a train that is heading towards a big wall that is going to crash, but eventually, investors keep sitting there and they point to that they tell the driver once a year that they should switch the track, and it doesn't. So, but they still point to that every year that we told them to switch the track, and it doesn't hold. They should get off that train, and there's also financial risk to that because as you come closer, it's going to be crowded at the exits. A lot of investors are going to want to jump, and there are probably going to be financial impacts from that. Stranded assets and direct financial impacts if you stay too long on those runaway oil trains.
Very good way to put it, I think. Another aspect of this that I think is not talked so much about, and I haven't seen you talk about it that much either, is that you can avoid those bad investments. But if you sell, if we take the pension money, we're talking about $3 trillion that is invested in fossil fuel. This is 3% of all the money that exists in the world. That is a huge amount of money. When the pension asset managers are listening to you and the consumers, and when they start acting, that means that this money, 3 trillion, can be used for the solutions instead. So one aspect is to sell what's bad, but another aspect is what will happen if $3 trillion are invested in the solutions? Do you have some, what do you see about what will happen? How big effect will that be in the green transition for the solution?
It's as important to get rid of the bad as increasing the good. So by moving money from the bad to the good, it helps really the transition. But of course, ideally, as an investor, you would make, for example, oil companies reduce their extraction of oil. But if that doesn't happen, because if they can make that happen, they really drive down emissions. So that's really helpful. They can stay invested. We propose get these companies to adopt solid transition plans. It's okay that they have fossil activities today, but if they adopt solid transition plans, they're part of the solution.
Yeah.
But the problem is that they don't adopt these transition plans. So they don't have a pathway that is aligned with the Paris Agreement. Then you shouldn't have your money there. You should move them to the green solutions. And this shift is something that is important also as a signal that companies, by moving your money in certain directions, you send signals to the companies. This is what we like, and that very much affects companies. They want investors to like them. They want happy shareholders. So those signals are really important. And the way to change how financial institutions act on sustainability issues is by changing norms. Because as I said before, everyone is involved, is linked to all problems in the world. So no one is 100% responsible for this problem. Everyone is a small part everywhere. So how can you change this kind of meta sector that is on top of the rest of the economy? Is by changing norms. And the way you change norms is by creating front runners. To get certain institutions to take a step forward, others follow. And I see, especially in Sweden, that we have a good opportunity. We have, Swedish institutions tend to be, they like to be front runners. They just need the right circumstances, like a watchdog, consumer pressure, media attention, then they take the step.
So I want to ask you around who do you see are doing the right thing? Who do you want to give climate love to? Who do you think deserves the climate love in finance?
I would give climate love to the over 50,000 Swedish bank clients that have sent a message through our website to their banks, saying that these issues are important to them as clients. because we see that it really has an impact. We see a lot of improvements in the Swedish banks. They have far to go on an absolute level, but we see many improvements by this increased, consumer client pressure. So that's really helpful for, changing this problem.
So everyone can make a difference. It's not that hard.
Everyone, just like recycling, your garbage, this is also a very important part to put pressure on your banks, your pension funds. We try to make it, simple, and we're really thankful that so many people have actually taken action.
But you're not only giving love, you're also giving some warning, right? Who do you think deserves the warning most?
Yeah, we mainly focus on banks in our research, and I would give a big warning to the 3 remaining big Swedish banks, SEB and Nordea and Swedbank, that continue to finance oil and gas expansion. So expanding extraction, which is a violation of the Paris Agreement. It undermines our ability to reach the climate targets today. So this is something that they should follow, Handelsbanken and Danske Bank, that have adopted a ban against that.
Let's invite them to a dialogue then, and hope that they will do it on the same transparent way AP7 did. Last question. We are in the climate crisis. I just saw the statistic from ocean temperature yesterday, and the curve is kind of going crazy, and we're talking February. Are you optimistic that we will get us out of this situation and start solving the climate crisis?
I'm very worried. I think most people haven't realized how serious it is. But I'm still hopeful, and I would say, and this has changed. I've believed a lot in the, political power and political actors to address these issues. But actually, I tend to look more for that corporates will play an important role. And I see the reason is that they have a business case for acting, because they really see the financial risks to their business. That this will have an impact on their businesses. So, and we see a lot of positive, momentum steps, front-running companies that take the lead and others follow. So, I hope politicians are picking up speed. Currently in Sweden, it's kind of the opposite, I would say. But on the global level, I think, I feel some hope.
I agree with you. And thanks for coming here.
Thank you.
Lastly, I want to give you this because you deserve a lot of climate love for what you do. Keep pushing. Thank you.
You too. Bye.